Hello everybody, welcome to another update on the stock screener. Today we have another episode on Verde Agritech because they had Q1 earnings release. And just take a deep breath, there is nothing wrong. The numbers look very good and we will go through the numbers. But first, I wanted to give a premiere of my new forecaster index tool. As you know, there are a lot of forecaster tools here, and I added the pool forecaster, which forecasts fertilizers. So with this tool, you can actually forecast what the fertilizer prices will do, because we all know that food is the leading indicator for fertilizers. As you can see here, for example, here you have a top in the global price of food index. And then a few months later, you see a top in fertilizers. And then here, when it goes to negative, you can see that that was the top of the fertilizers. And each time when it is negative, you can see that fertilizers go down. And when it's positive, then fertilizers go up. So when you look at this time frame, you can see that we are clearly in the positive. We went down a bit, but now we are rising again. So I expect that fertilizers will keep on rising. So we are not in the negative yet. So we are not topping out yet. Just an interesting tool that you can use. And now let's get to the earnings. So Verde had revenue growth of 1,260%, earnings per share 254%. These are a lot of numbers. So it's very difficult to analyze this all. So let me do it for you. Basically, everything is the same. The guidance, we already know. We already know the guidance on the tonnage and the earnings. But what we didn't know yet, that's the quarterly numbers of earnings and tonnage. And as you can see, the tonnage in Q1 was slightly lower than originally, and that's because of the bad weather. But that will be resolved next time. Okay. And here you can see that the tonnage has been increased. So that's good. And I expect that these are low ball numbers. So they are going to increase guidance even more in the coming quarters. Because you know they are sold out. Also very important, because many people don't know this. These numbers are based on these assumptions. Assumption of $500 potash. If you multiply this by 6 for the concentration of KCl, then you get to $500 per ton potash. So I expect that these numbers here, these earnings per share numbers, are going to be much higher because the current price of potash is 1,400 in Brazil. So that's something that you need to know. Important here, production cost per ton is lower. 24 and 30 was last year. So that's good news, and I will expand on that. You can read all of this, but this is important. Verde did not see a proportional increase in pricing in Q1 because they sold a part in Q4. So that means they don't have the full price yet. So in the future, the earnings are going to be better because the price has gone up. So that's important to know as well. And then you see some of the costs here. So let's go into the numbers now. Let's start with the cost per ton. That's very important. So these were the previous numbers. I did a video on the cost per ton. You can look at that other video. So those are these previous estimates. And now we have the new estimates. So this is new information. And I put them in here. So here you can see the revenue. So that's this number here. Revenue. Then the EBITDA is this here. EBITDA. And then here you have the cost per ton. So that's revenue minus EBITDA is the cost per ton. And this is in potash equivalent. Okay. And this is the production, which is also given here. Production. And I divided it by 6 because this is in potash equivalent. So these are the numbers. And what do we get? We get the following chart. A very interesting chart. And you can see here already that the cost has gone down at this production level. So that's a very good sign. Also here, the cost has gone down. But at higher production levels, you can see that the cost actually goes back up. And the reason for that is because they need to they need to truck more product to a higher distance, to a further distance from the mine. So that's why we see that the cost is actually rising. But okay, it's still lower than these numbers here. And the average is around 288. So here. So 288 is the cost per ton for this year. I don't know yet what the cost is going to be for higher tonnages. So we will need to see next year what the cost per ton will be. Okay, I will keep updating this chart. But that is important. I have updated my cost per ton from 300 to 280. And for next year, I kept it at 300. Okay. Now, the next thing that I want to talk about is the earnings per share, the PE ratio. So you can rewatch my video on the PE ratio. So these were the old numbers. We used 70, we used potash of 500. These were the old numbers for the revised earnings. And we changed that to the current potash price, current oil price. And we got a PE of around 3. And this is the PE right now at 10 at 500 potash. Okay, 500 potash. But currently we are at 1200 potash. So the PE is around 3. And we use 1 million tons production for this year. Next year we go to 2 million tons, and that would give a PE of 1.4. Now, this column is new. So here I'm using the Q3 numbers. So these numbers here. So what I did is I used this earnings per share, 0.35, right? 0.35. Production, I took this production, 353,000. And we did the same calculations here. And here the share price I did divided by 4 for 1 quarter. And then I see here PE of 6. So there's a huge difference between the PE of the whole year, which is 10, and the PE of only the third quarter, which is 6. So all of these quarters have different PE ratios. And of course, the third quarter has the best PE ratio because they sell the most tonnage. But this gives us the potential of how low this PE ratio actually can be. And this is at 500 potash. So let's go to 1200 potash and 100 oil, which is the current price. And then we see that the PE is 1.8. Okay. So how did I calculate this? This is the same production. The revenue is just this times this, okay, divided by 6, of course. And then the cost, I took this cost here, but we divided by 70 and times 110 because oil has gone up. And then the earnings are revenue minus costs, okay? And then we get this earnings number, and then we can calculate the earnings per share, which is $1. And that's this share count times the earnings. So earnings per share we know, and this is the share price, which is actually current share price divided by 4 because this is for 1 quarter. And basically we get a PE ratio of this divided by this, and that's below 2. So what does this mean? This means that Q3, okay, Q3 with a price of 1200 potash will be a PE of 2, okay? And I think that they will keep on producing this amount of glauconite. If you do this times 4, then this will be around 1.3 to 1.5 million tons. So that's a PE of 2. Now let's expand to 2 million, which is the production next year. So that's the guidance for next year, 2 million tons. So if we go from here to here, then the PE is going to 1.3. Okay, because you basically double the production, so the PE will go down. So this is 2.8, and it goes down in half to 1.4. And this was the PE for this amount of tonnage, and this is, if you do this times 4, it's around 1.4. Yeah, so 1.4 going to 2 million, then the earnings, the PE is going to go down a bit less. But eventually we get to the same PE in both columns. So that's good. Eventually next year, the PE is going to go to 1.3, 1.4. So there's plenty of upside, easy double, triple by next year. Now there were people here that wanted to see what happens at 800 because potash will probably go to 800 and not stay at 1200 right now. So let's see what happens. Then we have PE of 10 or 6 for this year. At 500 we go to a PE of 6 to 4. So let's say PE of 5, and that's this year. And next year we go to a PE of around 3. Okay, so PE of 5 going to a PE of 3. That's 2 million tons. So let's put it back to 1,200 because fertilizers are not going to go down. They're just going to go higher, as you know, because the global food prices are rising. So we are going to see PE of around 2. Okay. Now a PE of around 2 means that this is going to be an easy triple. So let's see my valuations. We are currently here at 340 million and is going to triple to 1 billion. So that's correct. It's going to triple to 1 billion. And if we get a valuation of a PE of 10, then it will go 5-fold. So that's from here to 1.5 billion. So that's a 5-fold. So there's plenty of upsides, people. And I have not even talked about the 13 million production that will be coming by 2024. And we will get a permit for that by next year. Okay, that's the next plant. That's the plant 3. So there's a lot of growth coming. We are currently only at 340 million and we are going to multi-billion dollars market cap. And I'll see you in the next video. Bye.